class we studied about demand for money. Then before that we studied about functions of money. We can go through one more time functions of money. Okay, then in the case of functions of money, we know different types of money is there. We already studied what are the functions of money. Then here you can see some functions: medium of exchange, measure of value, standard of deferred payment, store of value. These are the main functions of money. Okay, here you can see for medium of exchange, if you need to buy something, means money has the purchasing power, and we are using for transaction purpose of goods and services. Okay, then unit of account, money treated as common measure of value for all goods and services exchange can be expressed in terms of money. Suppose someone is working, that work is calculating in terms of money. Okay, that labor work is calculating in terms of money. Okay, that one is the unit of account. Then here you can see goods. Suppose you need to buy this dress, then you need to give some money. That one is unit of account. Then deferred payment, you can set you can use the money and you can give for debt and future payments. If you need to give some payment for loan, then you can give money. Okay, that one is the secondary function. Then store of value, we can hold assets in form of liquid or cash balance. Okay, you can hold some money, means this is the purchasing power of the money. Then money have the store of value. If now you are storing and after 10 years you are giving also, you will get the same value. Okay, then this money have the purchasing power and store of value also is there. Okay, then transfer of value. Okay, you are transferring some movable or immovable assets. With money you can transfer that asset. Okay, then these are the main functions of money. Here you can see transfer of values. Okay, then exchange value is there. We know for goods and services we can exchange money, unit of money, and we can buy that service. Okay, these are the main functions of money. Then forms of money, we know cash and credit money is there. Okay, then we know what is cash. We know like card, ATM cards are there, check will be there, deposit will be there, demand draft are there. These are the different forms. Then components of money supply means main money and coins. We know currencies are issued by central bank or government. We know currency and coins means money and paper money and coin means currency are issued by who is issuing notes? Central bank. Okay, they have 10% acceptability as a means of payment. Their acceptability is based on a promise to pay bearer gold and foreign exchange in exchange. We know if we are giving anywhere in India, that note is acceptable. Okay, that is the specialty. Then another thing is demand deposit. We know banks deposit, we know what we are getting for deposit, we will get some interest. Okay, then a bank is legally bound to pay money on demand. Demand deposit, bank suppose you can deposit money and on your demand bank can pay that money. Then another thing is near money or money substitute like check and legal compulsion. Then bank check, we are using check and everything, that one is the near money. Then term deposit, it is less liquid savings. Bank deposit, they cannot be used before a fixed period. Then other forms are non-bank financial intermediaries. They are like liquid as bank deposit. Then another forms of money, we know coins are there, currencies are there. These are the paper money and currency coins. Okay, then we know token coins have intrinsic metallic value less than its face value. Okay, then the generally lower denominations are made of cheap metals like nickel and copper. Token coins are used for exchange of small values. It refers to coin made out of metal like gold, bronze, silver, like copper, nickel, like that. Different currency coins are there. Okay, here you can see metallic or currency coins. Then paper money or paper currency consists of currency notes issued by the state treasury or the central bank of the country. Okay, then paper money or paper currency means currency notes issued by the state or central bank of the country. Then we know bank demand deposit, that one is withdrawable, and issuing check has started functioning as money. They will give check, that check is conventionally accepted medium, and as a means of payment the business community is using this facility. What we are doing, we will give check for some payments, especially business people, they will give check. That one is the bank money. These are the checks. Then demand draft. Okay, then next one, forms of money. We know different forms of money is there, like then legal tender and conventional money. In modern era, currency money and bank money together constitute the total stock of money or money supply. Okay, currency money means both currency coins and currency note is a legal money or fiat money. We are calling it as fiat money. It have the general acceptability. Then currency money means both currency coins and currency note is legal. We are calling, what is legal tender means both currency coins. This for last year exam, this question came, what is fiat money. Then both currency coins and currency notes we are calling as legal tender money, or another name is fiat money. Fiat money means currency coins and currency notes we are calling as fiat money. Then this credit money or bank demand deposit are conventional money and lacks general acceptability. Means every time people will not accept this check and everything, because some issue is there. Sometimes in account balance will not be there, like that problems will come. That reason that one is not that much acceptable. Then what is money supply? The total stock of money circulating in an economy is the money supply. Then total stock of money we can call it as money supply. Then the circulating money involves currency, printed notes, money in deposit accounts and in the form of other liquid asset. Okay, then monetary policy of a country is concerned with the supply of money. Narrow money supply is called M1. It consists of notes, coins in circulation and demand deposit with banks and central banks. Then money supply we can classify into M1, M2, M3, and then the total stock of a money in circulation among public, we can write it as M1, M2, M3 and M4. We can define it as M1 equal to currency plus demand deposit. M1 equal to currency plus demand deposit. Okay, currency with public and demand deposit with commercial banks. That one is the M1. Okay, then M1 is currency with the public and demand deposit with commercial banks. Next one is M2. M2 means M1 plus saving deposit with post office savings bank. M2 means This M1 means currency plus demand deposit with commercial bank plus savings deposit with post office savings bank. That one is the M2. Then next one is M3. M3 equal to M1 plus net time deposit of commercial banks. Then here we included only demand deposit. In M3 we are including demand deposit plus time deposit. That one is the M3. Then M4 equal to M3 plus total deposit of post office savings organization. Okay, we know post office savings like national savings certificate, like that some certificates are issuing by post office. Then in M4 we are calculating post office saving deposit. Okay, here savings deposit with in M2 it is savings deposit with post office savings bank. Okay, in the case of M4, M3 plus total deposit with post office savings organization means like national saving certificate. That one is the M4. Okay, then CU means currency notes and DD means demand deposit of commercial banks. Then M1 and M2 are known as narrow money. Then questions will come, what is narrow money? M1 and M2 means currency with public demand deposit and then plus savings deposit with post office savings bank. This M1 and M2 we are known as narrow money. This is narrow money, and this M3 and M4 known as broad money. Okay, this M3 and M4 known as broad money. These measures are decreasing. We know M1 and M2 are most liquid and easiest transaction. This we know M1 and M2 means we can easily currency with the public. That one is in liquid form, means we can use most liquid form is M1 and M2. But in the case of M3 and M4, these are least liquid form, means broad money. We are calling it as broad money. Means M3 is most commonly using measure of money supply. Then we know in the case of M1, in broad money it refers to the money that is held in the forms of savings and time deposit. Normally people will invest like for 5 years, 6 years time deposit, and besides the currency and demand deposit. That one is the broad money. Okay, then this broad money is the least liquid form. Okay, then this broad money, this one is known as M3, is the most commonly used measure of money supply. It is also known as aggregate monetary resources. Okay, then these are the main things about the legal definitions of money. Then in legal definitions of money, M1 is there, M2 is there, M3 is there, M4 is there. Then here you can see M1 equal to currency with public, demand deposit, other deposit with RBI. M2, M1 plus post office savings bank deposit, and M3 equal to M2 plus time deposit with banks. M4 equal to M3 plus total post office deposit like national saving certificate. Then M1 is considered as the most important measure of money because it is the currency with public. Then N1 includes virtually all the money supplied by the RBI, Government of India, and the commercial banks. Okay, that one is the M4. Then broad money supply means M3 and M4. M1 and M2 are known as narrow money. Okay, M1 and M2 narrow money, and M3 and M4 broad money. That is the specialty. Then M1, legal definitions of money means M1, M2, M3, M4. Okay, narrow money and broad money. Okay, then legal definitions of money means M1, M2, M3, M4, narrow money and broad money. That one is the legal definitions of money.